Welcome back. We are sticking with results. Two big banks, State Bank and Kotak Mahindra Bank, reported numbers and they are trading in the red right now. SBI's numbers were actually above street expectation. I mean, the profit higher by a good 3 to 4%. But the bank actually lowered its credit growth guidance. And that perhaps is responsible for the red. On the other hand, Kotak's profit itself was a tad below street estimates, but Kotak Bank importantly managed to hold its margins close to 5%. Now that most of the big banks have already announced their numbers, we thought that we can take a look at the overall picture with Santanu Chakrabarti, the banking expert from BNP Paribas. Good morning, Shantanu. Thank you very much indeed for your time. First up, let's take a look at State Bank itself. It seems like good profit that NARCL's money has come in and maintained their margins quarter on quarter. You impressed?
I think the operating numbers from State Bank were fairly robust. I mean, there was a small negative surprise on operating costs. But the trouble with something like State Bank is because the fourth quarter, especially on employee gratuities and things like that, it becomes a little unpredictable. Their fourth quarter typically on operating costs. So we'll have to see how much of the increases are sustainable and how much is not. But broadly, on most operating parameters, it was a satisfactory set of numbers, if not exceptional. And one thing you have to keep in mind was that quite unlike Axis Bank, that NARCL release that you're talking about, the SRs, they have taken that to the other income line. I mean, you might have had a lower other income and a lower credit cost with the same profit outcome if they wanted. I think you absolutely nailed it, that the minor disappointment that the market is seeing relates to the fact that they guided for 12 to 13% kind of growth.
Yeah. Can we talk margins and treasury income a bit? How will margins pan out? Because the expectation now is that the end repo rate is either 5.5 or even 5.25. The possibility of RBI supporting a little more because inflation is coming in lower than expected. Then what happens to their margins? Contrary-wise, they should make money on treasury, isn't it, since yields are going down?
Right. If indeed rates come off in an accelerated manner and even the movement in the rupee remains supportive of that fact, the fact that growth has softened in the US market means that the odds of a rate cut there also now become significantly more pronounced. Absolutely on board with that macro view that it might be slightly more accelerated now. But we have to keep in mind, Latha, is that would probably mean that in the first half of the next financial year for all banks, earnings may see a small revision downwards, but you're going to get a concurrent expansion in margins and therefore possible potential upgrades Q4 of this financial onwards and definitely moving into 27. So it really
you're expecting earnings upgrades based on better margins
on the second half or at least the last quarter.
Okay.
Because
would you worry about loan growth generally, Shantanu? But SBI clearly indicated that people are deleveraging, large guys are deleveraging, and therefore there can be a loan growth issue. But overall as well, growth could take a bit of a beating because of this uncertainty that the tariff picture has put in. Are you all changing the loan growth picture for banking as a whole?
As of now, no. And I'll tell you why, Latha. Because, we have a run with a 13% kind of system credit growth number. And obviously, most of the better private banks are somewhere above that. HDFC is an exception for reasons that that matches more or less what the system is delivering. And why I'm not changing this is because our prognosis around corporate loan growth was always pretty muted. We are basing this on some normalization in retail growth and the fact that SMEs continue to run at a very robust pace, which we expect will continue. Now, as far as tariff impact is concerned, yes, of course, economic uncertainties and overall slowdown has an impact on credit growth. But we have to keep in mind that the primary impact on the banking sector from tariffs, if I forget the second order effects around GDP growth itself, is going to be from capital inflows. And there, the foreign buyer at the margin seems to have turned positive. And the consequence and liquidity implications of that for the system are also now visible for all to see. So
Yes.
in that environment, I don't expect credit growth, expectations to shift downwards too much.
Okay.
See, 12 to 13, maybe, it is actually system growth.
Yeah.
And for SBI to grow that isn't exactly a big change in view. Maybe it's a
Okay.
change in perception from what has happened in the last 1.5
Okay.
years.
Okay. No, fair enough. Actually, my guess could be entirely wrong, and we could be a China plus one option, and credit growth may pick up as well. At the moment, too many moving parts. But Kotak Mahindra Bank, your summary argument is that they just have to show growth, or they are too capitalized.
Right.
Can you just elaborate, explain that point of view?
Every time I tell anyone a bank is too well capitalized, especially to a European or American investor, they look at me like I'm from another planet. Like, what is that thing that you're talking about? But the point is, you're putting, multiple on capital at the end of the day.
Yes.
And that's how you're valuing the bank. So it's not just about the robustness of the bank. You're not buying bonds of the bank. You're buying its equity.
Equity.
And high capital has two impact. One is obviously it overstates ROAs a little bit. More importantly, your ROEs become limited by the fact that there's too much capitalization, so the leverage number is low. Or if you want to take a earnings growth prism on it, what happens is as the bank levers up, all other things remaining equal, earnings growth actually trails what loans grow at. Because
Okay.
with every passing year, for the same spread also, your net interest margin and ROA will optically look lower. Because a NIM calculation costs equity at zero, right? So as the equity proportion goes down, your earnings growth actually trails what loan growth looks like. And that's the problem around Kotak. So it's not,
Okay.
I mean, first of all, you have to understand that there's much that we like within the business, and embargo removal, etc., have to be kept in mind when we gauge its, loan growth guidance and these things. And there's nothing fundamentally wrong with it. Trouble is the amount of capital and therefore the multiple that you're paying on it. And relative to where we see our upsides in the other large banks in HDFC, ICICI Axis, this has remained underperform. On the specific issue that we had mentioned, we had expected, effectively they're talking about 15-16% kind of loan growth, right? Which is robust,
Yeah.
right? 300 basis points above system, but not
Yes.
enough in
Okay,
their
not
part.
enough given their capital. I take your point.
Yes.
They're in a specific situation. Okay,
Right.
I'm running out of time, so I will have to put the entire banking picture in front of you. We now have all the top 5 or 6 banks. You also, I think, additionally cover AU and Federal. So now,
Yeah.
what is your hierarchy of picks and
So
why?
look, HDFC, ICICI Axis has been our top 3 picks. I mean, HDFC and
Okay.
Axis both have higher upsides than ICICI, but on a risk-adjusted basis, ICICI still remains the best bet through any kind of turbulence within the sector. SBI, we are neutral. Kotak, we have an underperform. IndusInd, given the volatility, we have an underperform. And that's a development we would watch very closely. You know that I have downgraded AU to underperform recently.
Yes.
It was a 2-notch downgrade. Stock has actually done the other way around. But there are some concerns that I have regarding both their long-term compounding outlook as well as the volatility around it, which has led me to moderate valuations. And CUBK also, we have underperformed, but the thing is that for the last 2-3 quarters, numbers seem to be on the mend. Is it enough to change our view yet? Probably not, but we are watching it very closely.
Okay, okay. Well, very quickly, a word on Bajaj Finance. Expensive stock still remains a buy for you?
Yes, definitely. I mean, in the beginning of the year, we had almost 55% upside on the stock. Then the stock did very well. And now, what might be seen as a 100 basis point 1-year growth outlook moderation, stock seems to have corrected quite a bit. So it still remains a healthy opportunity, definitely our best within the, NBFC pack, and probably close to a 30% kind of return idea right now.
Yeah, expensive, but then it is at least 25% sustained growth. So,
Yes.
you have to give it a higher value. Shantanu, very quickly, what is your head of research or your strategist's view? Do banks come high in the hierarchy?
Yes, we are still running a small overweight on banks, and it is not as large a overweight as we were running last year, but it's still an overweight nevertheless.
Okay. And very quickly, you wouldn't worry now about asset quality at all. The scare on unsecured is over.
Look, I mean, I'm not. Let's keep MFI to one side of the table.
Yes.
But other than that, I'm not majorly worried about asset quality. Having said that, some of the credit cost numbers in things like SBI look absolutely pristine. Have been doing so for all but the current quarter, right? So there's some degree of normalization that can happen, and which we expect to happen even without any major change in asset quality. Quite simply, prudence will call upon these banks to increase their provisioning, which, if you are a 1% ROA business, has significant implications.
Okay. Well, there are a few more questions, but I'll take a rain check from you for another day. We are out of time. But banking results so far have been satisfactory. What we have to check out is who are the banks that are going to gain from the new LCR rules. They will be able to perhaps show higher credit growth, but that discussion on another day. For the moment, wrap up on Bazaar. Chartbusters coming up after the break.